Good day, ladies and gentlemen, and welcome to another exciting edition of Tax 101, a taxpayers education program proudly brought to you courtesy of the Federal Inland Revenue Service, the FIRS, and I'm your regular host, Elizabeth Aluko. And if today happens to be your first time of joining us on Tax 101, it's a tax education program where we enlighten you on existing Nigerian taxes by inviting tax professionals, tax administrators, and other stakeholders to explain to us certain area of taxes and their implications to our business and personal income. So today on the program, we'll be looking into a special area of tax that affects mostly the corporate taxpayers. If you happen to be in business, you would have had one or two occasions where you do business to business and the third party insists on withholding some form of tax from your income. So all these and many more is what we are going to be talking about under what is known as the credit note. How a taxpayer can obtain the situation that leads to you getting a credit note, who issues a credit note, how you can obtain your credit note, and finally how credit notes are being utilized. But before I introduce my guest, who is from one of the top tax firms in Nigeria, I would like to take a quick message from our sponsors. When we come back, we'll get right into it. Stay with us, don't go nowhere. Okay. Joining us on the program to take us through everything about the credit note is a partner, is Mr. Demola Olanrewaju. He's a partner with Ascension Consulting Services, a pioneer tax firm in Nigeria. A pioneer tax firm in Nigeria. Thank you, Mr. Demola, for joining us on the program today.
Thank you, Lizzie. Good to have you around.
Thank you so much for taking our time to join us on Tax 101. We appreciate you.
It's a pleasure.
So, sir, like I just mentioned, our center, or rather our focus on the program today is on credit notes.
Yeah.
But first, I want to ask, often I hear the statement, credit note is equal to cash. Is it true?
100% true, because it's just a way of payment of tax to government of your future tax liability.
Okay, so on that note, I will ask, what exactly does credit notes mean to us taxpayers?
Oh, credit note is simply a document confirming the payment of advance tax. That's the simple definition. Document issued to you to confirm that you have made payment of the future tax.
Wow.
Because credit note is actually defined as advance payment of tax. So that credit note now, a document certifying that you have actually paid, made some payments on the possible tax liability in the future. And that's what they call it, credit note.
Fantastic. So who issues the credit notes?
Oh, we have two principal bodies that issue credit notes.
Okay.
Number one, from the federal level, Federal Inland Revenue Service, FIRS.
Okay.
They issue credit note upon the filing of tax return by taxpayer. And then State Internal Revenue Service as well issue credit notes to individual that make filing to them.
Okay, now that we have established that fact, I would like you to tell us what type of transactions that brings about, that can lead to having a credit note from the tax authority.
Okay, thank you for that. We have different type of transaction. Some were actually defined in the enabling acts. Okay. Under the Personal Income Tax Act 2004 as amended, when you start from section 73, it's actually stated there of all items. And principally we have dividend, we have rent, we have interest, and we have royalty classified and defined in the act. But lastly, in that the last part of the section that deal with withholding tax credit, it made mention of deduction at source. Deduction at source is not defined in that a particular item. The way dividend, royalty, rent, and interest were defined in the act. But it's referring to general activities that can lead to qualify for chargeable withholding tax. And what are these? There is what we call withholding tax regulation that actually itemize all other items, classify them into a group. Number one is all form of contracts. So whatever you do with other party that represent a contract between two parties will be subject to withholding tax. We call on all form of building. When there is a building, the supply, withholding tax will accrue on this. It goes and move a little bit. It's saying anything of consultancy. So whatever you do that is a form of consultancy will also lead to withholding tax. That means it has no end, as long as you are relating with another taxpayer. And that purpose of relationship is revenue transaction between one party and others. Then withholding tax may be applicable, except where the income is exempted from tax.
Interesting. Because I know a lot of taxpayers, they come onto us, and it has actually created some form of controversies where contractors, suppliers, when their payment is being 5% is being deducted from their final payment from maybe a third party, and you see them raising issues like, I pay my taxes, you don't have to deduct this money, and some of them even going as far as asking, do they have that right to withhold some part of their payments as taxes and all of that. So all these are actually part of the is actually backed by the law.
Yes.
For a third party agent, or rather an agent to the tax authority.
Okay, maybe just a quick clarification there.
Yes.
The moment you are a registered taxpayer,
yes,
you are automatically an agent of government.
Oh, okay.
You don't need to be issued a letter of appointment. The day you register with a respective tax authority, that day you have registered yourself unknowingly as agent to them, free of charge.
Wow, fantastic. Because a lot of time I'm like, okay, so how would the taxpayer know that, okay, this particular contractor or particular company is actually registered as a collecting agent with the tax authority?
Okay, you are expected to actually verify anybody that is running business, any entity must be two form of registration. You could be a registered business, an individual, and then you could be a company incorporated. The moment you have any company incorporated is an agent of government.
Okay.
And then the same thing happens when a business is registered, it's an agent of government, and they are being empowered under the obligation to actually deduct certain percentage as applicable. Withholding tax is not the same rate.
Yes.
We have 10%, we have 5%.
Okay.
So 10% usually for company registered. That's for registered company, and they are majorly rent, interest, lease, royalty. But there are things that are common to whether you are business or you are a company. A registered business will still pay 10% on rent, on hiring, on lease. So on royalty is 5% for individual. So this cut across, but for contract, either whether you are a registered business or you are an incorporated company, is 5% across board.
Okay. Because I know that is the part that affects a lot of people.
Yeah.
Small
business will definitely be on contract and supply, which is going to be 5%.
Okay. Okay, so does the taxpayer have the right to decline such deduction?
You don't have the right, because there is a penalty on the other party.
Wow.
Provided you deal with me and you are the supplier of business to me, I'm going to pay you.
Yes.
I'm obligated to deduct from before I make payment to you of applicable rate. If I don't do that, do it to your insistence. What it means is that I will incur the wrath of the law. There is a penalty of 10% plus the amount not deducted.
Wow.
And then including plus additional interest at interbank rates.
Wow, that's
for the current year, FRS actually agreed that the interest will be 19% already defined. So now for not deducting, for not carrying out the obligation, I have three things. I will pay the money that I should have deducted from your fee, 1, 10% of that amount as penalty, and then plus 19% interest for not doing what I'm supposed to do, and
Wow.
you have escaped. So
that's a lot.
So the liability is actually on me, on the payer.
On the payer, which I'm sure a lot of any company won't want to go through.
Not at all. Not at all. Not at all.
So you've actually touched on how to identify a legitimate agent of the tax authority, which is by ensuring that they are already a registered taxpayer.
Correct.
Tax authority. So what is the turnaround time? So after that deduction is made by that third party, or rather the agent to the tax authority now.
Yeah.
So at what point what is the turnaround time? What is the process of the remittance and the person getting their credit notes?
Okay. Ordinarily, what is required of everybody, though there is a little bit of conflict somewhere, FRS Act says you have to file your withholding tax, any amount deducted at source, and submit to government within 30 days. The Enabling Act, Company Income Tax, said 21 days. So, but what everybody in practice is used to is actually 21 days. Within 21 days. And how is it done? That means the filing of return within the month that followed the month of transaction, on or before 21st of the month that followed the month of transactions. For ease of clarification, let's assume there is a transaction in September.
Yes.
So you are expected to file all your September transaction, the withholding tax on them, on or before 21st of October of the same year. And that is the turnaround from the part of the payer. But from the part of the government, it cannot be determined, really. In the past, we used to get it maybe within 1 or 2 months before you get the credit notes. But I remember it got to a time that you don't even have it for years.
Wow.
But the introduction of the new model, the ICT,
the
e-services has actually simplified the model majorly, because you don't need to get the physical receipt again. Your account is directly credited. And this brings another issue that goes beyond withholding tax credit notes. So in the past, I can tell tax authority, I've not made any sales. I've not done any transaction that I hide. But now if I see credit in your account, you have done something. So the e-service has actually been very good and has simplified the process much more.
Wow, that is noted. And I wanted to also bring your attention to the issue that always come up, like you actually said, there are some bottlenecks. We have heard of cases where agents withholding tax, and they don't remit to the tax authority, and it comes a time when the taxpayer, the affected taxpayer, and the supplier, the contractors need to make payment or use that credit note to offset that liability that must have accrued to them at the end of the year, and it becomes a problem.
Yeah, we're aware of that.
Okay.
And we've had clients that actually experience similar thing. We've explained time with that number to tax authority. The approach is not as simple, as direct, until you push, because the tax authority, actually want to see physical receipts. But here we are, your appointed agent. I've taken my money, and I want to file the returns. You are telling me that the other party has not filed. It's no longer my business.
Exactly.
I didn't appoint them. You appointed them. They have deducted my money. The filing doesn't concern me any longer. It is your call. So what we did, one of the matter practically recently, we've been writing to FRS to intimate them that it is not fair to deny taxpayer utilization of credit despite not having the physical receipt. And what they ask us to do is that, can we have the payment remittance advice that shows that the withholding tax was actually deducted? One, we supported it also with bank statements. We also went there with our invoice. See the invoice. We raised 100 naira. We got 95 naira. 5% of it. And then when you check our invoice number, check the bank statement, you will see 95. That means your appointed agent has deducted the 5%. It's not my call to run after the agent. It is your call.
Wow, that's interesting.
And we've resolved this not 1 or 2 or 3 with tax authority.
With the tax authority.
Yeah.
Well, I think with the new e-service platform, that should make it easier for the agents to file in those returns as at when due, and also for the taxpayer to get their credit note as quick as possible within
the e-service platform has reduced it, but the truth is this: you will only have what is submitted in the e-service.
Yes.
So if it's not submitted at all, the e-service will still be there and not being used, because it takes the other party, the party that has deducted,
yes,
to actually submit same and pass it through the e-service before my account can be credited. But where such has not been done after deduction,
yes,
I will still not have the credit.
You are correct. You are absolutely correct, sir. On that note, we'll go on a short break. When we come back, we'll talk about how to utilize the credit notes after receiving such credit note from the tax authority. Don't go nowhere, taxpayers. Will be right back.
Thank you.
Before we went on break, we've actually touched on what exactly is credit notes, who issues the credit notes, and what situation or kind of transaction that can bring about the tax authority issuing you as a taxpayer a credit note, and all the issues that comes up when trying to obtain a credit note from the tax authority, and also on the side of the agents that are remitting or filing in these returns with the tax authority. And now I would like us to focus on the utilization of credit notes. So, sir, credit notes, you actually agreed earlier that is equal to cash.
Yes.
So now we know, we've established that fact. Credit note is cash. It's issued by the tax authority, and it's actually, you actually also made mention that the credit note is to offset future tax liability.
Yep.
So I want to ask again, for the benefit of those that are just joining us,
okay,
how a taxpayer can utilize that credit note that has been issued.
Okay. The taxpayer needs to put the credit note together with the withholding tax credit note, and then after arriving at his tax liability,
yes,
it will deduct the amount already deducted by the agent of government, called credit note, and then the balance is what is going to pay cash. If those ones are not enough, if the credit notes are enough, it will not pay anything at all. It will not pay cash at all, because he has already paid.
Yes.
The day those money were deducted, that day he has paid certain tax.
Okay.
So, and maybe additionally,
yes,
when you have surplus, because you can have more credit note down the tax liability,
yes,
and then at that point, okay, what lead to is that you can seek for refund.
Actually,
From government. Section 23 of FRS Act actually established that you can seek for refund, and then section 73 of paragraph 4 of Peter also actually stated the same thing, that you can seek for refund. Section 81 of company income tax as well also say that you can seek for refund.
What if that refund is given back to you as credit notes? What happens?
You have options that you can accept it as credit notes, and then you can actually seek for cash.
Okay, so that also brings me to the issue of, must we use that credit note, that particular credit note issue in that particular year to offset that tax liability that we actually accrued in that year of transaction, or can we move it over to the future?
There is no limit to how you can move, because it's your money. You have paid it.
It does not have expiration.
It doesn't expire.
Wow, fantastic.
So you can use forever. But the way it works is that I cannot use credit notes for the current year,
okay,
for the past years.
Ah.
Yes,
so if I have a credit note from, say, 2017, which is last year,
exactly,
I can't use it to offset past liability from 2016.
No, because the transaction, they have not, you've not generated a transaction then. But you can use 2016 to settle 2017, 2018, 2019, 2020, and then so you can't use 2018 credit note to go and settle liability of 2017.
Oh, you are the first person that is actually making this very clear to me, because a lot of people have come up to say, oh, they could not utilize their credit note. They said it wasn't valid and all of that. And I'm like, credit note shouldn't have validity. And it's clear that we are actually glad on Tax 101 that you have actually clarified that issue for us, the taxpayer. So if you are out there, taxpayer, and you're a small business, or you're a business person, or a contractor, a supplier, and you have credit notes issued to you by the tax authority, you can actually use this credit note to offset your future tax liability, as long as it does not have
it doesn't have expiry date. So
long is the future, not the past. That's what.
No. Let me clarify it. So you can use it for past, or what we are saying, so we don't mix it together. Is you cannot use 2018 to settle the liability of 2017.
That's what I'm saying. Yes.
Oh, okay. Yes. But you can use 2017 to settle all your future liability.
Yes.
And it doesn't have expiry date.
It doesn't have expiry date. It doesn't have the validity is open.
Oh yes, it's open.
As long as you can use it. So we are glad to know that. So the credit note, you said, does not have expiration.
Yeah.
Yes. So the taxpayers can actually utilize their credit notes, but does it also is the credit note also tied to any form of transaction? Must it be that, okay, is this particular transactions, this particular tax liability that is coming from this transaction, that you must utilize that credit note, or you can just use it generally? No.
It is not generally, but it's not limited to a particular transaction. It is used for. It is used for only. It is used for. How do I put it? It is used for income tax, because withholding tax is deducted from income.
Yes.
So you can only use for income generally, but you can't use credit note to settle, for example, VAT liability.
Wow.
You can't use it when you have withholding tax payment liability, but you can only use credit note for income liability.
Income liability.
Exactly.
Like personal income.
Company income tax.
But not for VAT.
Never.
Wow. You know, this law is actually tricky, but it's good that we are very clear on it. So thank you very much. So we also know that you also made mention that if you don't, assuming the taxpayer does not utilize all their credit notes within that year, they can actually seek for tax refund.
Correct.
So taxpayers, if you have tax liability, or rather you have credit notes, and your credit note is more than your tax liability, you can actually seek for cash refund, tax refund from the tax authority.
But it's not free, because when you seek for tax refund, government will come for audit to establish your position.
Yes. Oh well.
So documentation will be very important. So you have your correct document, that when tax authority come, credit note does not lead to liability. Because in the process of checking, you might not have done certain things correctly, and then tax, the eyes of the law is everywhere. The tax might want to see everything, and they can see everything. So when they are looking at this, everything they are checking out, and they can find what you have not found. And in that process, from credit position, you might have more to pay.
Okay, so what would you advise the taxpayer not to bother requesting?
No. Then my advice to taxpayers to do proper documentation.
Yes.
Is to do proper disclosure.
Yes.
And then, so when you have this and you are doing the right thing, you are filing, and then you can relate your bank statement to your books of accounting entries. I'm telling you, you can seek for your refund. We've done it for clients, not two, not three.
Fantastic. Thank you so much. So what would be your final advice to taxpayers?
Oh, taxpayer, I would tell them to be bold enough to meet the tax authority whenever they have credit. I would tell them that whenever they've not collected their physical receipt, the credit note, they should still use their payment advice, remittance advice received from their clients, to go actually seek for refund, to claim their credit, and where they need be, they should not shy away from seeking for refund.
Are you sure that is possible? Because you are from a very big, notable tax firm, in fact, a pioneer tax firm, so you actually have that, credibility with the tax authority. But if an individual who does not have a representative should go, are you sure